Okay, students, this is the Domino's accounting worksheet. We'll go through it and we'll find by the end of this that this is very comprehensible. Most of the time with the accounting, the main goal is to think like a business person. What would you do if you were running this business? So we'll go through the example. Wesley manages the Domino's Pizza over on Crockett Road. He is low on supplies and ingredients, so he orders some additional inventory. The order is delivered and Wesley pays cash on delivery and restocks his store. That night, it's busy, and Wesley sells a huge number of pizzas, some for cash and some for credit. Now that the store is closed for the evening, Wesley has to account for all the day's transactions to prepare a financial activity report for the store owner, Miss Tynequa. All right, and now we're given the numbers. So here are the numbers that you're given. This very well could be what your boss hands you. Raw materials, inventory, order, invoice, $1,200. Total sales for the evening, $5,450. Percent of sales paid for by credit card, 62%. Okay, so right away it's asking us to figure out the dollar amount of credit sales. So you have to think about it like this. If 62% of the sales were paid for on credit, what percent were paid for on cash? So you could do that by saying like 100% minus 62% equals, well, what is 100 minus 62? Okay, would be 38%. So 38% of all sales were done in cash. So we'll need that in a second. Figure out the dollar amount of credit sales. So we need to multiply 62% by the total amount of sales. All right, so we will do that. Let me see which calculator would be best for this little exercise here. Okay, I guess we'll use the TI. Okay, so I just need to multiply, because credit sales were 62%, I need to multiply 62, try to get that glare off of that screen. I need to multiply 62 as a decimal, which would be 0.62, times the total amount of sales, 5,450, and I see that $3,379 were sales made on credit. So write that here, $3,379. So now figure out the dollar amount of cash sales. Well, you could do that one of two ways. You could either take the total number of sales, the total number of sales minus the amount paid for on credit, and that would give you 2,071, or you could take the total number of sales and multiply it by the percent paid for in cash, which was 0.38. And you get the same answer, $2,071 paid for in cash. So the total dollar amount of cash sales would be $2,071. It says here, assume Wesley submits his credit card receipts to Visa, MasterCard, Amex, etc., but is not paid back yet. So that'll become relevant later. Let's move down the page a little bit. It says here, do the T-charts first, since these will show the starting balances. Okay, so there are starting balances in these accounts. So what we're going to do is record these transactions. Okay, later on we'll record journal entry transactions. But first let's record these in the T-charts. So we have, in order to do that, we have to raw materials, inventory, order, invoice. Okay? And that's the cost. This is the cost of the inventory, $1,200. So we ordered inventory. It came in the store. We have to put it into the refrigerator. So we will debit inventory for $1,200. Now, how do we pay for that inventory? Okay, Wesley paid cash on delivery. Okay, so we paid cash. That means if we're going to debit inventory, we have to do the opposing entry on cash. We should credit cash for $1,200. That's reducing cash. Okay, and these transactions, debit, credit, net out to zero. They always will in double entry bookkeeping. Okay, so we brought the inventory in, and then we sold $3,379 worth of sales on credit. So the very first thing we need to do is record our credit sales. Okay, so what we'll do is we will credit sales for $3,379. And because these are credit cards, I need to debit accounts receivable because we haven't been paid for these for $3,379. Okay, so there's the opposing transactions right there for the credit sales. Okay, now, so we sold the stuff. We need to take it out of inventory. This is where it gets a little bit tricky. The cost of goods sold starting balance is going to be necessary for us to find out what the cost is on the inventory, okay? So I want to know the cost margin. The cost margin, this is going to be a percent, like the percent. If you're going to multiply the sales by this percent, you'll get the cost of sales. So the cost margin is equal to well, you have to think about what you're trying to find. The cost margin is equal to the cost of goods sold divided by sales. Okay, so what is the cost of goods sold divided by sales? What were we given? We were given that the cost of goods sold was $147, and the existing sales starting balance was $980. Okay, so divide 147 by 980, and that will give us some percent as a decimal. Okay, the 147 divided by 980 gives us 0.15, okay, times 100, that's 15%. So we can put this as 15% is our cost margin. This is important. We're going to need to know this. So whenever I sell something, I have to multiply it by 15% and take it out of inventory. That's what the cost margin is telling me to do. See, this is the cost margin as opposed to the profit margin. So now I'm going to take these credit sales of $3,379, $3,379, oops, you can't see it, and I'm going to multiply it by the cost margin as a decimal, 0.15. And I get 506.85. Okay, so on sales, think about it this way. On sales of $3,379, my cost of sales is $506.85. So I have to take that out of inventory. So I'm going to credit inventory for 506.85, and I have to debit cost of goods sold for 506.85. Okay, now we are going to record cash sales. So I'm going to have to increase my sales by crediting sales 2071. That's increasing sales by crediting sales. And then I'll have to, because this is cash sales, debit cash to make it go up by 2071. And that zeroes out that transaction. And now I have to figure out what the inventory cost is for the cash sales. That's 2071 times the cost margin, 0.15. 310.65. Okay, so what I'm going to do is go over here and record a credit to inventory of $310.65 and a debit to cost of goods sold of $310.65. See, these cancel each other out. Debit, credit. So it wants us to know the net. It wants to know the net balance. All right. So we got to find the balance in each of the columns. That's the next step, to find the net balance. And I need to subtract 2071 from 4562. 4562 minus 2071 gives me a debit balance in cash of 2491 and a credit balance of 1200. So the net balance will be debit minus credit. So I'll subtract 1200 from 2491 to get a debit balance. Because the credit is smaller than the debit, you end up with a debit balance of $1,291, and it's a debit balance. For accounts receivable, remember, we were not paid back. See, we were not paid back, so we just have this debit balance in accounts receivable. Oh, that's easy. 670 plus 3379. Okay, 4049, that gives me 4049. That is the net balance because there's no opposing entries, so I've got 4049. And in accounts receivable, it's a debit balance. How about sales? Okay, unless you have chargebacks or refunds, you won't have any debits to sales. So, not until the very end, when you close the books out every year. So now, in sales, we're going to add 980, starting balance, then we'll add the credit sales of 3379, and the debit sale or cash sales of 2071, and all of that adds up to 6,430. So 6,430 is the balance. We put that here, 6,430, and it is a credit balance because sales, being an income account, credits increase it, debits decrease it. Now inventory, we will have to net this out. So inventory debit balance, inventory credit balance. Okay, so let's figure it out. In the debit column of inventory, I've got 3,900 plus 1,200. That gives me 5,100. And in the credit side of things, I've got 506.85 plus 310.65. And that gives me $817.50. $817.50. So what is my net balance? Well, you take debit minus credit, 5,100 minus 817.50, and you're left with 4,282.50. So $4,282.50. And is it a debit balance or a credit balance? Well, the debit was bigger than the credit, so it's a debit balance to inventory. Okay, so that's the cost of our inventory that's still in the fridge. All right, now cost of goods sold. Okay, we only have debits to this, so we just have to add up this debit column. 147 to start, plus 506.85, plus 310.65. $964.50. $964.50. Okay, that is the net balance as well. $964.50. And there's no opposing entry, so it's a debit balance. Okay? So that's how you do that top part. And we will now move on to journal entries for the same transactions. Okay, so some people find the journal entry format more clear, and some don't. So for the inventory debit, now we're kind of resetting the gears here. We're going to bring in the inventory. Okay, so let's bring in the inventory from the order. So we will debit inventory for the original inventory order of $1,200. We paid cash for it, so we will credit cash. Now, we're going to make some sales. Remember, in sales, we sold $3,379 on credit cards. So we will debit accounts receivable for $3,379, and we will credit sales for $3,379. Okay. Now, what is the cash sales that we made? All right. So my cash sales were $2,071. Cash sales $2,071. And we credit sales for the same amount, $2,071. And now it's time to offset the entries with cost of goods sold and inventory. So I've got to reduce inventory and increase cost of goods sold. This combines the cost of goods sold for credit sales and for cash sales. So go back up here. These are my two numbers, and I need to add the cost of goods sold for credit card sales, which was 506.85, to the cost of goods sold for cash, which was 310.65. That gives me 817.50 total. So I'm going to debit cost of goods sold for $817.50. Okay, and then I'll have to oppose that entry with a credit to inventory of $817.50. Fantastic. Now, to turn this page a little bit to see what this thing is asking me over here. It says, what was the gross profit, sales minus cost of goods sold? Well, what were the total sales for the evening? Right? Now, it's a bit of a question whether you should use the starting balance for this transaction or for this calculation. It would have been helpful if I had written and specified like specifically what I wanted you to do. So I'll accept either way. You can either record the sales for the evening, or you can record total sales minus total cost of goods sold. I'm indifferent about that. So I will show the total sales, okay, which would be $6,430 minus the total cost of goods sold, which would be $964.50. So sales minus cost of goods sold will be $6,430 minus cost of goods sold, which is $964.50. Okay, so $6,430 minus $964.50 equals 5,465.50. $5,465.50. Okay, and now it says, what was the gross profit margin? Sales minus COGS divided by sales times 100. So we'll take sales, 6430, minus COGS, 964.50. Okay, and then divide that by sales of 6430. And we see that, you can't see, we see that our margin, if you multiply times 100, the gross profit margin is 85%. And this is what we would expect, because this is the profit margin, okay, versus, right, the cost margin, which was 15%. And these things are always going to add up to 100. So 85 plus 15 is 100. So this is the gross profit margin, and this is the cost margin. All right, so those are going to add up to 100. Okay, and that is the worksheet. I hope you found this interesting. You know, this is, really how it would look if you were trying to run a small business. You'd be making these transactions yourself, even if you were running like a little pet store or a vet or something, and you had to do the accounting, or you were running a welding business, or you were running a little plumbing supply store, or if you were running a hair salon. Okay, you're going to have inventory, you're going to have sales, you're going to have invoices, you're going to have cost of sales. People are going to pay you in cash, people are going to pay you in credit, and you've got to know how to handle these transactions so you can be successful business people. Because, in the modern world, regardless of whether you are in business, if you think you're in business or not, you're in business. Even if you're working for someone, you're essentially like a little tiny one-person corporation contracting their labor out to some huge corporation. Okay, so I hope this was helpful, and I hope it was interesting to add the Domino's pizza component to it. I'm glad some of our class friends made the narrative. All right. Thank you very much for watching.